And it's another day to make money right here in the markets. If you're playing in Lagos, Nigeria, that's the domestic markets, or in the global markets, anywhere you're playing, let's get you the top stories coming up in the next 55 minutes. And markets in Nigeria await Nigeria's first quarter GDP numbers to be released by the NBS 5 p.m. today. And as African fintech startups move from being acquired to the acquirers, we gauge expectations going forward. And about 200 pilots from Fly SA Fair in South Africa on strike over wages. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets that we track now. Starting with the global oil space that we're seeing oil prices dip there this afternoon. $68.90 a barrel, losing that $70 per barrel level, down 0.55%. And we see the U.S. WTI grade, that's down 0.45%, less than Brent, $67.04 a barrel. That's trade right there. Let's get a quick check on metals now. We're seeing the metals market there. Gold prices are holding firm. It's green across the screen with palladium. That's the biggest mover today, 2.50%, $1,271 per ounce. And we see that's followed by platinum there, 1.80% advance, $1,400. I'm sure we're heading to $1,005 for platinum at this point. Spot silver, not yet at $40. We're trading at $38.43, and we see it's green also, and that's for spot gold and U.S. Gold futures. That's trade right there. But to help us unpack what the charts are saying and price levels to watch, that's resistance and support levels, let's bring in Sunil Dixit. He's a technical research analyst, SK Charting, joining me via Zoom. Hello, Sunil.
Hi, Ladi.
Hi, Sunil. So I know you love to, watch those charts. I know you like to, give us those numbers, those price levels that we should be watching, at this point. Let's look at gold first. What are the price levels you're watching for gold?
Current consideration, we are watching 33.75 and 33.85 initially for the bullish breakdown, and further upside requires clearance through 34.10, which is a major hurdle in sight. Current consolidation is taking support at 33.45, which has made a low intraday low today, and there has been there's been substantial demand from 33.45 today, and we saw current price trading on the higher flanks of 33.76 at the moment. There is no significant data scheduled for release today from the US side.
All right, so those are the prices to watch there for gold. Immediate resistance there, according to Sunil, there about 33.85, 34.10 there. That's for the immediate resistance. Support levels, $3,345 and $3,320. All right, Sunil, what are you seeing for oil at this point? What are the price levels to watch this week?
See, for oil, there was a news that European Union is considering putting some sanctions on Russian oil, and that caused some spike recently, but it failed to clear through 67.80 resistance, which is required for further bullish upliftment. And the current support is holding the price above 64.80, and that on the downside, the support should hold as long as the prices are not clearing through the upfront resistance, that is 67.80, and further price action on the higher side is expected to hit at least $72 to $74 in coming months.
All right, and Sunil, I know you also track the crypto market at this point. We've seen Ethereum. Ethereum has been having quite the run at this point. What key levels are you seeing for Ethereum?
See, Ethereum, if you see on the daily chart, for 13 days in a row, Ethereum has been closing on the green, and the daily time frame shows RSI conditions are extremely overbought with a reading of 88. That calls for caution on the heights, and any pullback will witness first support at 3,700, followed by 3,400 on the downside, and the nearest resistance is swing high of 4,100.
All
That
right.
is the resistance that we are expecting, which will attract some sellers as well.
All right, so you got the levels there for most of these markets that we track. Those are the key price levels to watch. If you're a swing trader, according to Sunil Dixit there, those are the price levels to watch. That's for gold, oil, and Ethereum at this point. Thank you so much, Sunil Dixit. He's the technical research analyst at SK Charting. Thank you for coming on today.
Let's welcome, Reddy.
All right, let's get a check on all the stories now in the market. Now we see the governor of the Central Bank of Nigeria, Olayemi Cardoso, has warned that the recent surge in liquidity from Federation Account Allocation Committee, that's FAC disbursement, may threaten the bank's efforts to rein in inflation. He cautioned that large monthly injections, especially following June's record 1.81 trillion naira allocation, must be offset by tight monetary policy to avoid renewed price pressures. He made this personal statement following the 300th Monetary Policy Committee meeting that was for 20th of May 2025, with remarks published on the Central Bank of Nigeria's website. That was over the weekend. To other matters now, to telecoms. Now we see the Nigerian telecommunication operators as MTN and Airtel. They've confirmed the resumption of SIM swap and other SIM-related services following a technical disruption linked to an upgrade of the National Identity Management Commission's NIN verification platform. MTN Nigeria announced via its support account on X that SIM swaps have now resumed, thanking NIMC for their assistance during the migration to the new platform. Similarly, Airtel Africa acknowledged earlier erroneous reports of downtime, stating the NIMC portal is up and running and they're addressing the issue and they value the patience of most of the users there. And in a decisive move to curb the proliferation of unregistered investment schemes, Nigeria's Securities and Exchange Commission unveiled plans to introduce a USSD verification code, enabling mobile phone users to confirm the legitimacy of capital market operators without a need for internet access. The SEC Director General, Imomotimi Agama, announced the initiative, emphasizing its deployment at the upcoming Capital Market Committee meeting this quarter and its role in safeguarding investors from Ponzi schemes masquerading as legitimate opportunities. Dr. Gama underscored that the USSD platform will empower Nigerians to instantly verify claims made by individuals or firms offering investment services, stating if someone claims to be a market operator, you can check using the USSD code there. So that's the regulator trying to protect investors at this point. All right, let's move on to monetary policy now. As the Central Bank of Nigeria's Monetary Policy Committee, they begin their rate-setting meeting today and tomorrow. We'll get the decision. Economists and experts have signaled a likely 25 basis point cut in the benchmark interest rate, currently at 27.50%, citing continued disinflation and stabilization in the foreign exchange market. Take a listen.
Even though we've seen some easing in terms of headline inflation, core inflation has still remained sticky. And I think month on month in June, we still saw food inflation sort of have an uptick. So while it's positive, I think things are still a little bit more shaky. The MPC may want to, stay on the side of caution, rather than rush to begin to make a cut now. In order for the MPC to enable things to balance a little bit more, they may want to be cautious because bringing rates down may also cause investor sentiment to wane, and that could, make a run on the naira and cause instability in terms of the currency. So because of the currency mandate as well, the Monetary Policy Committee may want to be cautious. I would say that even though MPC or MPR rates have being at 27.5, we have actually seen the CBN sort of reduce stop rates on things like treasury bills and OMO bills, which generally is bringing down the costs of borrowing to the government and also sort of impacting market rates as well, right? So even though the MPR is sort of an anchor rate, market rates could still tend to be a little bit different.
And that was earlier from Business Morning there. It's all about what to expect for interest rates in the country, and definitely we'll get that decision. I'll be covering it right here on Channels Television by 1 p.m. Tomorrow. Is it going to be a cut or another hold? We'll definitely find out. All right, so other conversations now. We see 2025 has been a record-setting year for African tech, about $1.35 billion. That's raised in just 6 months. That's a 78% jump from last year, signaling growing global investor confidence. But we're going to dig down on what's really driving, this surge. And we've also seen a trend here in Africa, a sign of growing maturity there for African startups. They're no longer being acquired at this point. They're now the ones doing the acquiring. Let's look at some of the landmark deals so far. We see Money Point there, acquired Sumac in another market in Africa. Move, they acquired Covey. Limfi acquired Pillar. So it's not just about being acquired at this point with African startups. Well, let's unpack this now and what to expect going forward. We have Tomiwa Aladekomo, is a founder, Big Cabal Media, joining us via Zoom. Great to have you on the show.
Thank you so much for having me. Good afternoon.
So from your lens now, I know you've been tracking this ecosystem, for years. Does this feel like a turning point or another wave in a cycle?
It really does. I think, we do this conference, and this year our theme is building momentum. And that's how we think of where the ecosystem is at the moment. It's building momentum as a more mature technology ecosystem, one that's actually starting to return capital to investors, one where the operators are increasingly capable and confident in what it is that they're building, and one in which they're sort of really casting their eyes globally. When we did our conference last year at Moonshot, we said our theme was building for the world. And the idea was that the products that we're building, the companies we're building, are not just solving African problems for Africans, but are solving African problems for the world. So when we start to see these kind of moves, where Limfi is acquiring Pillar, where we're moving within the continent, we're moving into other markets globally, it says that we were on the money in terms of our thinking about how startups have to operate and how it is that they have to approach the world. And I think it's great that we have the kind of operators that have the confidence, they have the kind of backing and investments that they actually can go out there and acquire sort of like international startups to sort of grow their businesses. And it's definitely a new moment.
Right. So if you're a startup and you acquire another company, can we still call you a startup?
I think you're then a mature startup. So we have what we call early stage startups. And so they're just starting, they raise what we call seed rounds, and the seed round might be $1 million to $5 million. The companies that you're seeing now are in growth stage, when they do their acquisitions. So if they're still raising capital, they're raising $30 to $50 million. And so you might still call them startups, but they're growth stage startups. They've figured out product market fit. They're building something that the market has clearly said it wants. And if they're raising capital, it's because they are expanding their operations. They're going into new markets. They're going into new business lines. So something like Money Point, at this point is sort of building, they've acquired a banking license here, and then they've acquired this bank in East Africa. So they're telling you we're going to be a major African bank. And if we're raising capital, it is towards that level of expansion, that level of ambition. So still a startup, still a fast growing technology company, but one at a very, very different stage.
Right. I guess there are levels to this, startup thing at this point. But, these startup-led acquisitions, you've said they signal maturity at this point. But what does it say about, the founder mindset and investor patience?
I think it shows incredibly ambitious founders. And I always say this, that some of the founders you get from Africa are some of the best founders in the world. Their ability to operate in these markets, to make sense of sort of difficult markets, Nigeria, Kenya, Africa generally can be quite challenging to operate in. So for you to say you've conquered Nigeria and I'm going to go and conquer East Africa, I'm going to go and conquer Latin America, I'm expanding into North America, is incredibly confident, incredibly bold. I think from an investor perspective, it means that they're confident that you have the operational capacity to do it. They're willing to back you as you grow into other markets. And investors want a big return. One of the challenges with Africa is that our markets are quite fragmented. And so it looks like there's a big African market, but really you're going to have to conquer Nigeria separately from Kenya, separately from Uganda, separately from South Africa frequently because you got to deal with the regulators in different ways. So sometimes when you're expanding, you're like, if I can go into the USA, that's a major market, that's one market, and that's a big opportunity. In Africa, you probably want to conquer the big four. So you could do Nigeria, Kenya, South Africa, Egypt, or depending on your strategy, companies like Wave are doing Francophone Africa. But I think it does speak to incredible confidence by both investors and founders and operators that they really are able to sort of deliver this growth. They really are able to sort of really win in different markets.
Right, and definitely with maturity, I guess, comes a lot of responsibility. Do you think these startups, have what it takes to overcome risks? When it comes to, I'm sure there are expansion risks. For you being a fintech, expanding to other, countries and continents at this point. Do you think they're able to weather any storm, that comes with the risk of expansion?
I mean, expansion is risky, it's dangerous, but I do have to say we are dealing with a much more capable ecosystem from the founder and operator side, from the investor side, from a regulator management side. A really important thing that's happened in our ecosystem is that we're no longer at the phase where everybody is experimenting from ground up. The operators, the founders of these companies, whether it's Lemvi, Moneypoint, Move, whichever one of it is, these are people who've worked in multiple startups before. They've worked in growth stage startups before. So startups that have gone from very, very small but grown very, very rapidly. It gives them a wealth of experience with managing regulators, with managing risk, with managing operations in multiple markets. And you can see it from the way they move. The level of capital that they have access to gives them access to advisors who understand these markets, who understand the risk. So you're not working with a local lawyer that only has dealt with one market. You're working with lawyers that understand regulation in the target market that you're trying to move into. And so I think that they are incredibly capable as operators and as companies. And yes, I mean, we see big global companies go down or really get damaged by risk. But I think that the operators that we have sort of building and running these companies are definitely ready to take on the world.
So what are you seeing, going forward for Africa's startup ecosystem? Do you see more startups acquiring, more businesses, or maybe the ones that are not unicorns and all of that, acquiring, at this point? What are you seeing?
I think it's really important that we're starting to see exits. So not necessarily in terms of IPOs, not a lot of IPOs yet, but we're seeing sort of secondary rounds where investors are sort of receiving capital back. I think that's important. I think we're going to see that continue to happen. I think that we are in building momentum stage. So we need more of our early stage startups to get into growth stage and sort of raise real capital. We need a lot more investment in the early stage startups. So very, very important that we start to see more local capital deployed towards technology. Our investors are still very, very aligned towards sort of like the traditional sectors, and that's everything from, energy and oil and gas to real estate. And we really need a lot more early stage investment because the next round of Flutterwaves and Moneypoints and Paystacks are coming. And now is the time to fund them. Now is the time to sort of get into whether it's clean tech, whether it's edutech, whether it's health tech, fintech again, commerce, lots of interesting opportunities. So this is the time to get into them. And again, like on the Tech Cabal side, every year we have this conference, Moonshots, that happens in October. And we try to bring sort of the most interesting startups that are doing things and investors and the markets to understand one another and to meet one another. And so I think it's critical that we're paying attention to those startups who are attending events like that and sort of like, making sure that the most interesting startups coming up now, the most interesting technology ideas are getting the funding, are getting the capital that they need for us to build sort of that next wave of incredible startups that will go global.
All right, I guess at this point is African startups to the moon and maybe beyond. Thank you so much, Tomiwa.
Thank you for having me.
Yeah, thank you for joining us today. Founder Big Cabal Media. Thank you for coming on today.
Take care.
And talking about the moon, we'll find out which asset classes or stocks are heading to the moon at this point. That's the moment. Willie Bong will bring us those details. Just stay with us. All right, let's find out who's going to make money this week. Willie Bong joins us now. Good to have you, Will.
Hey,
Brand
Larry.
new trading week. Good to have you, but you're starting off with red.
Well,
that's a red.
Well,
top.
I did mention to Ini one time, I said red in China. I'm looking at globally. I'm a global citizen. So China, red signifies good things, good news.
Oh, yeah, they love red in China.
Yes. So it's actually a good sign. So I'm, identifying with the Chinese culture.
But the bulls don't like red.
I'm identifying with the Chinese culture right now.
Fantastic.
So you were talking about, with your guest earlier, with the analyst, talking about, and he mentioned something about Nigerian investors or investors leaning towards traditional companies. That's why they're putting their investments in more like. But right now, with the GDP that we're expecting, the rebased GDP, we see
5 p.m. today.
Yes, 5 p.m. today. We see that, a lot of other sectors have been captured, and we see digital tech, information technology. So I think this is going to change the status quo and the way investors, venture capitalists that are out there, we're looking for them, will be looking at the startups right now. Because they are going to be making the key, they're going to be an integral part of the economy. So
I can imagine how proud, some
yes.
of these VCs are, seeing companies they invest in as startups, now acquiring other companies.
Like you said, I'm a startup acquiring startups.
Oh yeah, Will is a startup.
So let's begin with major equities in Africa, and we see them positive at intraday. Nigeria's NGX was trading higher at 0.16%. Resuming that bullish momentum we saw last week, still at 131,000 points. We see GSE in South Africa also trading up 0.28% at intraday, 98,000 points. Elsewhere, Egypt EGX also in the green, ended yesterday in the green as well, but continuing that bullish sentiment, up today 0.11%. And we see the NSE in Kenya closing Friday's session also in positive territory. But to get a sense of what's happening at the NGX, what's driving the sentiment, why are investors still bullish on stocks at the NGX? We have Onose Asotie Enaolo, senior investment analyst with Main Street Capital Limited, to discuss this. Onose, it's good to have you on the show.
Hi, Will. Thanks for having me.
Onose, so we're just, bullish again. So what are the stocks investors are eyeing at the moment?
So right now, for today, it is largely the industrial goods sector, because while the NGX is up, at the intraday, some major sector indices are down. Banking is down, consumer goods is down, insurance is down. So right now it's industrial goods and mostly Total with oil and gas, but the focus is mostly on industrial goods. I know we've seen a lot of interest in Boa Cement. Even this morning, Boa Cement was up quite a bit this morning, and we're also looking at Wapro and Dangote Cement.
Okay, so for Boa Cement, let's just zoom in on that. Are we going to continue to see this uptrend with that stock? What are we to expect from it in the near term?
Yeah, so today is actually their payment date for their dividends, 2024 full-year dividends. So I won't be surprised if we see a slight pullback in its price action. But going off fundamentals, they did really, really well, like fantastically well for their Q1, 92% gross profits, 67% net profits. So their operations are really efficient and they're really profitable. And then with a lot of infrastructure projects that are expected to, even in the public and the private sector, it's expected that, this their impressive margins will continue, throughout Q2 and maybe even the rest of the year. So I'm surprised if, we might see some pullbacks, a pullback in the near term, but over the next couple of weeks, Boa Cement is one company that I will definitely be looking at.
So it's a buy for Boa Cement, not a sell. So we'll just hold on to that, Nose. So we're looking at today, the CBN MPC started, the meeting today. Rates decision is going to be tomorrow, final day. We're going to hear that. What are your expectations, Nose?
Yeah, so in this kind of things, I try to look at everything that's happening right now with the monetary policy rates. Right now, yields are around 16%, so yields are declining. Now we know that the CBN, while they want to lower, the finance cost for their debts, they do not want to lose foreign portfolio investments. I believe in Q1, foreign portfolio investments was about $8 billion, and it's expected that it will well, some expectations place it at 16 billion by the end of the year. On another hand, there is the problem of inflation. While headline inflation was lower last month, 22.22, food inflation and core inflation were a lot higher. So I believe right now the CBN wants to be cautious. While there might have been an expectation initially for a rate cut, I won't be surprised if the CBN kind of keeps rates constant if they don't raise it, right? So there is a possibility that they raise it, and I really won't be surprised, because even technically, if you look at the 10-year benchmark yields, we are currently at a dynamic support. Now, if you look at there's a median dynamic support from the year 2022, right? And the last time we came to that support was around February last year, where we had the run in yields where we started out. So I won't be surprised if we have a situation where whatever decision that the CBN comes to, we see an uptick in yields, in the fixed income market. So I do not see them really slashing rates. I would be surprised if they do. I see them either keeping rates stable or possibly even hiking rates a little bit.
Okay, the best markets have sort of priced in, all these numbers coming in, because what are the reactions from market players ahead of the decision tomorrow?
Usually, when you have like MPC and monetary policy decisions in the fixed income market, people are kind of tentative. Nobody really wants to get in and then be in a losing position. But I know there's an auction on Wednesday, a T-bill auction, and that's really now going to show us where the market is leaning, especially where the range that bids come into. So that's kind of what I'm looking forward to. I'm looking forward to know where market players are looking, and then where we can now take positions, or what we should expect from both the CBN today and market players on Wednesday.
Yeah, definitely on that. But still on expectations, we're expecting the GDP, the rebased GDP, the anticipated rebased GDP from the National Bureau of Statistics, NBS. Now, new base year, we all know 2019. The last GDP report we had was for the last quarter of 2024, which was at 3.84%. What do you see for today when the NBS releases the GDP? What are numbers, what figure do you think our GDP will be currently standing at for Q1?
It's a bit dicey giving out figures in this context, because I'm sure that there are a lot more the basket in which they measure. There's going to be even a lot more sectors in the economy that are going to be coming in. I won't be now. What I can say is this: while the figures can vary, the structure of what we've seen with the sectors that move GDP, I don't think there's going to be so much of a change in that regard. Because even when you look at what has been going on in the economy, for the first quarter of the year, we're still going to see, I believe we're still going to see the services sector really be a driving force for economic growth when the GDP report comes out. But I also expect to see, some improvements in agriculture and, in the industrial sectors contributing to GDP growth. Even with, we already see that happening with companies with the stock market, which has kind of been a bit of an indicator, a leading indicator for even what you might expect. GDP. With GDP reports, with the GDP reports. So yes, we will definitely will see a lot higher numbers. I think it's going to paint a picture that might be a lot more optimistic than the realities on the ground. But it should be fun to look forward to. But then again, services sector should still be the driving force for growth that I believe in the new reports.
Okay, so you did mention that services sector, the digital tech space is already like booming. But what will this rebase GDP now that they're going to be fully captured? The MBS talked about capturing the informal sector, the tech space. They're all going to be part of this, the database, the base data for the GDP analysis or determination for GDP growth in Nigeria. What does it mean for companies that are listed on the NGX, that are in this space? Or will we see more companies come on board now, maybe being listed? If they're being captured now, will we see growth for these sectors?
Yes, I think it's a huge possibility because I know even over here, when we're making investment decisions, we look at GDP and we look at sectors that have been growing or that show the potential for solid growth. So if you have a lot more sectors being captured, then definitely sectors that have posted or logged significant growth, especially over maybe last quarter or the last 2-3 quarters, depending on how it's structured, how they capture the data. I believe people coming into people looking at the new reports will see these sectors, and especially for foreign portfolio investors, because if we are going to see continued interest in the Nigerian economy from foreign portfolio investors, then they will want to get into industries that are growing or that have the best chances or the best prospects of growth. So if this like tech, the informal sector are added to the GDP basket, and then we can see and then use this data to project, then I believe that definitely, at least for companies that are on the NGX or that can be easily be invested in, we should see a lot of growth in these companies.
Fantastic. So it's first trading day of the week. How will markets close today, and what are your expectations for the rest of the week?
I think the market will close positively today. It's already positive right now, and I think even the sell-offs that we see, even some in the banking stocks, it's not a lot. There isn't a lot of sell pressure. It's just what I see is a couple of people taking profit. So I believe we're going to be profitable today. I also believe we should be profitable this week. I won't be surprised if our margin of profit may not be as wide as other weeks, because we're pretty high up, especially for banking and consumer goods, which have been two sectors really pushing this rally. But I still believe that we should see a positive week.
Thank you so much, Nasser Sotie Holo, Senior Investment Analyst, Main Street Capital. Analysts did say that we are overbought regions now. Thank you so much for your perspective. Now let's look at other major markets now. Looking at the Middle East, we see them trading mostly negative at intraday amid trade tariff jitters as Trump August the 1st deadline approaches. We see Dubai down 0.84%. We see Abu Dhabi also down 0.26%. Still within that region, we see the Tadawul, that's in Saudi Arabia, also down 0.06%. But the lone gainer there, the outlier, is the Qatari index, was up 0.48% at intraday. Let's look at the U.S. now. See how stock futures performed in pre-market trading. We see it higher Monday as investors track the latest developments in the trade and awaited the start of big tech earnings this week. Dow Jones Industrial Average Futures, you see, added 0.24% right there on the screen. S&P 500 Futures also rising 0.28%, and the NASDAQ Futures increased about 0.33%. Now, trade is once again in focus as the White House reiterates its position on tariffs. On Sunday, the U.S. Commerce Secretary Howard Lutnick called August the 1st the hard deadline for countries to start paying tariffs, though he also added that nothing stops countries from talking to them after August the 1st. And Wall Street, we all know, is coming off a winning week for the S&P 500 and the Nasdaq, both of which continue to notch all-time highs. The moves come on the heels of a solid start to earnings season. And on the economic front, we see the June reading for a leading indicators. It's going to be scheduled for release today, 10 a.m. Eastern Time, and that's 3 p.m. West African Time. Verizon Communications and Domino's Pizza among the companies set to report earnings today. Now let's look at Asia, see how they performed at the close of business today. Asia, we see Japan markets are closed for a holiday, but we look at the Kospi in South Korea, it's up 0.71%. Hang Seng also up 0.68%. That's in China. Look at mainland China's index. We see that Shanghai index also up 0.72%. And the Nifty 50, that's in India, also ending in a green 0.49%. Fantastic run for these indexes. These exchanges on the Asian stock exchanges in the Asian markets and also for the U.S. markets. Let's see if they will sustain that, especially for the U.S. market, it will be sustained in the green at the close of trade today. Ladi, a lot of news coming in. Now we see the S&P 500. It's going to be like a listing, like Block, that's Jack Dorsey's company. Block is going to be joining the S&P 500, so that's causing that rally for that stock. So I mean, for that index. So we're going to see what investors are going to be doing or looking at.
What investors are going to price it at.
Price it at, definitely.
These are incredible times for most of these markets. All of them, or majority
of them,
in overbought regions.
And
you know, right now, and you know what, basic 101, when it comes to markets, you try to take profit
when it's overbought region.
So, but will investors have that confidence, at this point?
Well, they'll probably
take profit.
And they're wondering, they're
maybe
hoping,
the train leaves
you. Or the train may not leave them and keep going higher, So they might just want to okay, maybe just hang in there, but
Who knows?
Who knows?
Who knows? All right. We'll get more updates, to see what will happen with most of these markets in overbought regions. Thanks so much, Will, for that. But let's take it on to Europe now. We see around 42 million employed people in Europe. They're classified as living in holiday poverty, meaning they cannot afford a one-week vacation away from home. Here to give us more details now, we have Emily Leshner with DW. Great to have you. Emily, quite an interesting classification there, holiday poverty. Why is this important?
Hi, Ladi. Yeah, what makes the findings in this recent report by the European Trade Union Commission, what makes it so significant is that this number, this so-called rate of what they're calling vacation or holiday poverty, the number has been rising for 3 years in a row. In 2022, 14% of people who were working and living in the EU could not afford a vacation for 1 week that was away from home. And just a year later, the rate increased a percentage point, which may not sound like a big difference, but that 1 percentage difference is an additional 1 million people in Europe, again, who are working that cannot make ends meet if they decide to go away on a vacation for just a week. And, of course, we know through scientific research that time off from work and from daily life is very important for mental health and well-being, to avoid burnout. Its benefits are not only for the individual, but for the companies and the enterprises that hire these people to work there as well. So that's why it's significant, because it's been 3 years in a row and the situation is getting worse for people.
Right. I guess we also need to track that data in these parts here. But, tell me, where are people least able to afford a short holiday?
Well, there's a big discrepancy between Eastern European countries and Western and Northern European countries. So in the East, there are higher rates of the so-called holiday poverty. Romania is at the top of the list. 32% of its employed citizens are not able to afford a week off. That's followed by Hungary, Bulgaria, Cyprus, Slovakia. The rates are there anywhere from 22 to 26%. When you head north to countries like Norway or Finland, Sweden, Denmark, rates are much, much lower, from around 5 to 7%. And those are at the extreme ends. But if you look at the big four European nations like Germany, Italy, France, and Spain, these are places where, ironically, they're top holiday destinations themselves. The rates are anywhere from 10 to 17%. So that means that in each country, you've got anywhere from 5 to 6.5 million people who are employed again, and in some cases, even running their own businesses that cannot financially afford a short holiday away.
So what's driving the rate? What's taking it higher?
Well, in general, places with stronger economies and higher annual net incomes, they have lower rates of holiday poverty, but not always. Ireland, for example, has one of the highest net incomes in the European Union, but 17% of its working population can't afford a week of vacation. So what it really stems from is a combination of rising costs for food, for accommodation, and transportation, while at the same time, purchasing power for individuals is decreasing. And there are a number of things that play a role here. Many European cities are experiencing a housing crisis. There aren't enough places to live or rent. And so city governments are cracking down on short-term rentals like Airbnb. That's just as a way to kind of reduce the impact. But these same short-term rentals are what made holidays affordable for people who necessarily couldn't afford a hotel. So it's a bit of a double-edged sword. And meanwhile, the tourism sector, it's just one of many sectors that are trying to meet new EU digitalization and sustainability standards. These are, standards around requiring airlines and cruise operators to report emissions, things like this, tougher eco certification standards. And that takes a lot of upfront investment, and it drives up the costs, for anyone in the transportation sector, and then spills down into for holidaymakers. So that is a key thing there.
All right, thank you so much, Emily, for breaking it down for us. We'll keep tracking that data to hoping that people get holiday rich at this point. Thank you.
Thank you.
All right, so I guess that's a big question, at this point. Can you afford to leave your job for a week, or that hustle, that you have at this point? Can you afford to leave it for just 1 week? I guess if you can, then I guess you're holiday rich, at this point. Let's get a check on other stories now on the continent. We see the president of World Bank Group, as AJ Banga, has just wrapped up his first visit to Songo in Mozambique's Tete province. He was in the country for a high-level engagement with Mozambican President, His Excellency Daniel Chapo, who has expressed a keen interest in strengthening cooperation with the World Bank, especially in driving key economic projects with energy development high on the agenda. Our South Africa correspondent, Innocent Sumosa, reports.
It was a day of celebration and excitement at the Songo landing strip as the community welcomed World Bank Group President Ayabanga. He later toured the Kahora Basa hydropower plant, where he was briefed on some of the region's electricity challenges. Well, the company has recorded some dividends, but of course they're facing challenges of supply and demand. But on the supply side of things, they are talking about the issues of ailing infrastructure and of course old machinery. One would imagine that the company is celebrating its 50th anniversary, so old machinery is one of those problems. But we do know that the SADC region is facing issues of a shortage of around 10,000 megawatts. But they're saying that the partnership with the World Bank would be a progressive move in terms of dealing with the issues of infrastructure around the region. Meanwhile, the World Bank leader underscored Mozambique's energy potential.
Nobody has the capacity or capability to do what can be done with the assets of this country. So I think this is a real opportunity to not only see and understand what has been done 50 years ago, which now can be the basis of the next set of investments. So we are discussing with the government of Mozambique the idea of investing in another 1,500 megawatts.
Faz parte do Grupo Banco Mundial. Podemos ter uma parceria público-privada.
As I very well said to the president of the World Bank and other partners of the World Bank Group who can come and invest in this whole energy grid that we are talking about, producing energy through hydroelectric power stations, solar power stations, gas power stations, and also wind power stations.
Carlos Yam, CEO of Pandakua, says an estimated $1.4 billion would go a long way in helping the company reach new heights and expand its impact in the energy sector.
The entirety of this project, if we include the financial and labor aspect, will be well above $1.4 billion. It is very important for us to analyze not only the documentation, but ideological issues and also infrastructural issues.
As Mozambique looks to power up its economy and expand access to energy, the visit by the World Bank Group president brings a renewed hope for stronger partnerships and sustainable development. From Mozambique in Songo, Innocent Samosa, Channels Television News.
Well, thank you, Innocent. Meanwhile, 200 pilots, making about 90% of pilots from Fly SA Fair in South Africa, are on strike over wages. The pilots are demanding a 10% pay increase, while the airline is offering them 5.7%. Fly SA Fairs had to cancel some flights this morning due to striking pilots. The pilots are asking for their salaries to be rectified. This is according to the during COVID-19 pandemic, the salaries were cut then, so they want that to match back up. According to the Solidarity, a union by some of these pilots, the strike and disruption of flights could go on for 2 weeks. And Egypt's Ministerial Group for Industrial Development, they've approved 3 major private free zone projects totaling $216.5 million in investments with the goal of generating 15,000 direct jobs across key manufacturing sectors. The initiative includes $108 million PVC board and flooring plant in New Laming, projected to create 2,150 jobs, a $30 million garment factory in New Beni Suef City, expected to employ about 9,000 workers, and $78.5 million textile facility in the 10th of Ramadan City, set to bring about 4,000 jobs. And First Exploration and Petroleum Development, that's First E&P, they've announced a strategic expansion of its operations across Africa, marking a significant step in its evolution from a national oil and gas outfit to a regional energy powerhouse. The company, which began producing oil in 2020 from the Nyala Madu fields under OML 83, now aims to enhance its production capacity and corporate footprint through a series of partnerships and asset development deals across the continent. And Lifezone Metals has acquired BHP's full 17% stake in the $2.5 billion Kabanga Nickel project in Tanzania, resuming sole ownership of Kabanga Nickel Limited following BHP's exit. The acquisition, valued at up to $83 million, transfers not only equity but also BHP's offtake rights into Lifezones. And we see the African Development Bank has announced a $40 million investment aimed at scaling up decentralized renewable energy projects across the continent. This strategic funding there is a move to light up and power Africa, and will support mini-grids, solar home systems, and other off-grid solutions to bring clean, reliable power to underserved rural peri-urban communities. And let's get a check on what's playing out in the crypto market. At this point, we're seeing green on the screen. Right there with just a few pockets of red. Bitcoin there still hovering near all-time highs, and Ethereum powering forward at this point, $3,817, up 2.09%. And we see Solana, that's in deep green there, $191, trying to challenge the previous high there of about $200, up 5.46%. Cardano is also way up there, deep in the green. So Tron, that's having a pullback right there in the market. Ben, we're going to be talking a lot about what played out over the weekend there with President Trump signing that the landmark bill there to regulate cryptocurrency, hailing the exciting new frontier that's for the technology. One day after the bill was passed, by the House. Joining us to unpack this now, we have Buki Wishaki. She's the principal head at Satoshi BBO Solicitors. Great to have you on the show. Good afternoon.
Great to be here, Ladi. Awesome to be on the show this morning.
Yeah, so I guess it's safe to say Crypto Week in the U.S., I'm guessing it was a success, at this point with the signing of the bill there. And I want you to break it down for us at this point. What new, fiduciary and disclosure obligations do you think are imposed, on stablecoin issuers? We know they have that mandatory one-to-one reserve requirement. Help us break that down.
Right. Okay, so the Genius Act actually stands for the Guiding and Establishing National Innovation for U.S. Stablecoins Act. The president signed it into law on July 18, 2025, and it's basically to regulate the payments of stablecoins in the U.S. Just like you said, the stablecoins are crypto that are pegged to fiat currency, so one-on-one for each US dollar, in this case, because it's US stablecoins. There would need to be a $1 full reserve backing of the currency in treasury bills or the like, just to create that value of liquidity. Now, the provisions actually do require consumer protection for investors in stable coins. And in this case, it's consumer protection in the event of issuer insolvency. So for instance, in the case of insolvency, it will prioritize stablecoin holder claims over all other creditors. And this is a welcome development, for the crypto ecosystem, apart from the other provisions within the Act.
Right, and talking about consumer protection at this point, let's imagine I hold $1 million USDT, that's in stablecoin, and something happens, to the company at this point. Who's going to settle me?
It will take the regular course of insolvency. The only thing is that for the stablecoin holders, your claims will come prior to other creditors. So, whether it's the courts or your registration systems that are being taken place, under the regulatory systems, you will definitely have your claims heard over other creditors. And again, this just gives stablecoin holders that trust in the system to know that whatever it is that they are placing within the ecosystem as stablecoins is guaranteed to get claimed back, in the case of insolvency.
And do you think, having to make sure you have that one-to-one peg, as a stablecoin issuer, is it going to make the job harder, or business harder for them, at this point, or does it, just make it, or they're just good in any case?
I definitely think it will make it harder, but it's to secure those who are investing in the system. First of all, crypto is a very sensitive ecosystem. People are not very trusting of crypto. A lot of people have trust issues due to scams, frauds. There's money laundering issues within the crypto ecosystem. So if you're saying that you have stable coins, within the system, you have to ensure that that liquidity is backed. You're not just dealing with digital currency that has no value. So the authorities in this case now need to ensure that the regular audit systems, the reporting systems, which are actually very, very strict under the Genius Act, have to be taken in place. They have to ensure that they are auditing regularly. I believe under the Genius Act, it should be a monthly reporting system. And they also have very, very stringent rules in place. You have, I think it's $1 million and then $5 million at the state level and at the federal level for criminal penalties for those who don't adhere to those reporting processes. There's also 10 years imprisonment and also 20 years imprisonment. So they're taking it quite seriously for the reporting processes and to ensure that whatever you're reporting, you actually do have those figures in real life value.
Right. We've had that argument, from some quarters that, cryptocurrencies kind of aid, money laundering and, helping, bad actors to mask, some of their activity. Do you think this act sufficiently addresses, anti-money laundering and sanctions compliance?
Yes, I do. Actually, it's one of my favorite aspects of the law. So the Genius Act actually aligns with the Bank Secrecy Act. And what it states in the Genius Act is that the guidelines for anti-money laundering protections that are stated within the Bank Secrecy Act must be adhered to by the stablecoin issuers under the Genius Act. So what does this mean? It means that all the KYC rules, the AML rules, the travel rule, which is a FATF recommendation and global standard, all of these must be adhered under the Genius Act. So it doesn't separate stablecoin issuers from the AML rules. Instead, it brings it to the front burner, which is quite impressive.
All right, so very quickly now, before I let you go, what should African economies and countries be doing right now with this Genius Act?
So for Nigeria in particular, I would say the Genius Act is very precise. And that's what I took away from the act. It creates the regulation for stable coins. It also separates the powers. I think that's the first step that we need to go over Nigeria regulation. So we have in Nigeria the Securities and Exchange Commission, we have the CBN and the NFIU, who are the ones regulating. Under the ISA 2025, it does state that SEC will have oversight authority over virtual and digital assets, but it doesn't specify for stable coin holders. In the US, what they've done is to separate that to make sure that Bitcoin and the like is under commodities, to make sure that investments are under SEC, and then to separate stable coins as being under the OCC. So I see that Nigeria should take a step in that right direction for CBN to take regulatory oversight over stable coins, separate that from the current virtual digital assets which are under SEC, and then have that oversight function, because stable coins are quite different in practice and in theory. And so if we have CBN taking that oversight, it's a payment on and off ramp opportunity. It will be better for the economy generally.
All right, so much to unpack there. Thank you so much. It was great having you, Buki Ogunsaki, the principal head, Satoshi, BBO Solicitors. Thank you for coming on today.
All right, thank you.
All right, so that does it for the show today. That's how the markets we track are looking. We're still seeing a couple of these assets at all-time highs in overbought region. What's going to happen next? We'll find out tomorrow. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.